Hi all, this is Fundamentals in 5 minutes, where I take a topic relevant to business owners and challenge myself to summarize it in 5 minutes or less. Today's video is all about depreciation, the incredibly important technique needed to expense assets. We will discuss what it is, how it works, and why it's important. And with all that said, let's get into it. Depreciation is an accounting tool that allows us to both account for the consumption of our assets that don't diminish and to correctly allocate the cost of these assets against the revenue they help to generate. Depreciation is an important accounting tool as it allows companies to account for the use of their assets that don't physically run out, that also last longer than a year. Computers and vehicles are really good examples of these. A company doesn't class the purchase of a computer or vehicle as an expense in the period they bought it. Instead, they record these purchases as assets on a balance sheet. A company will then use these assets over time to produce income, but they don't physically diminish or run out like an ink cartridge would. So to account for the use of such assets, a company will depreciate them over time. This depreciation becomes an expense on the income statement. Thus, a company now has a way of expensing their assets over time, appropriate to their use, how they wear out, and how they generate income. There are 4 main depreciation methods that can be used depending on what the company is depreciating. These are 1. Straight line depreciation, 2. Declining balance depreciation, 3. Sum of the year's digits depreciation, and 4. Units of production depreciation. How these methods work is outside of the scope of this video, but it's worth a quick Google to get yourself up to speed. It's important to correctly depreciate assets according to the rules and guidelines relevant to the asset in question. This is because of how depreciation expenses affect both the balance sheet and the income statement. In particular, because depreciation is recorded as an expense on the income statement, it affects both profitability and therefore a company's tax obligation. Thus, it needs to be done correctly. This is especially true of companies that have many large fixed assets. Depreciation is a big topic, but for the purposes of this video, what we really need to understand is that we should be across what and how we need to depreciate the assets that we have within our business. And if you have any other questions regarding depreciation, then I recommend you have a discussion with your accountant. They will help you not only identify what needs to be depreciated, but will also run through your options for doing so correctly. And with that, we're all done. Depreciation summarized in under 5 minutes. It's been my absolute pleasure to take you through this content, and as always, feel free to reach out to me on LinkedIn if you have any questions. I'll catch you on the next video.